Let's welcome on board the next guest on the show, Mr. Rishi Nathany, the Head Business Development and Marketing Manager at MCX joins us now. Rishi, hi, good morning. Thank you so much for joining us. We'll try and understand if you can help us with the latest news coming in on gold as well as crude as well. But first up, just wanted to come to the news that we got from SEBI a couple of days ago, wherein they have started this FPI involvement in the agri-commodity contracts as well. What do you think is the impact of this going to be in terms of volumes? What revenue potential could this decision have on your company?
Good morning and thanks for having me on your show. This FPI participation has not been allowed in agri, just to clarify. It has been allowed in non-agri commodities. And to start with, it will be in cash settled contracts. So we always welcome such moves where we get more participation in the market. So I believe that the overall depth, liquidity and participation in the markets would increase due to FPI participation coming in.
Can you broadly tell us that how big is this market globally? And if FIs, they come in this product, what happens to your top line? What happens to your brokerage?
So we don't make brokerage. We earn transaction fees since we are a trading platform. It's very difficult to say what would happen to the top line. But what can be said is that once FPIs do come in, and it's early days yet because the SEBI board has approved. We are awaiting the final guidelines from SEBI, and then FPIs will come. So it remains to be seen as to how many FPIs come, what is the participation, and accordingly, volumes would or participation would increase.
Taken also wanted to understand from you that since FY20 value of commodity futures, if I have it right, have come down from 89 lakh rupees to 72 lakh crore rupees, and partly this is also an account of the margin norms that have come into picture. Now, after FPI participation coming in, do you expect that the traded value of commodity futures is set to rise, and what could be that number? Let's say for FY23, is it likely to go back to that 90 lakh crore mark?
Okay, so just to clarify, while our futures volumes have dipped marginally, our option volumes have risen quite a lot. So overall, our volumes have risen from year on year. So with FPIs coming in, as I said earlier, while it's very difficult to quantify what would be the kind of turnover addition, but definitely more participants coming into the market would improve depth, liquidity, and overall participation in the markets.
Rishi, this morning we got the news that gold duty has been increased by 5 percentage points. I understand that you were looking at introducing gold spot exchange as well as electricity derivatives. First up, what do you think can be this impact on the gold prices, etc., and the sentiment around it with this increase in the import levy?
While, see, our contract is inclusive of import duty, so naturally the import duty hike would reflect in the traded price on the commodity. Having said that, import duty is a function of government decisions, while the market would continue to trade. So I don't see any positive or negative impact on volumes coming in. So market would trade basis fundamentals going ahead. And in terms of electricity derivatives, we have already applied to the regulators and we are awaiting approvals, so that we are also eager to launch electricity derivatives as and when we get approvals.
Right. Now, just coming back to the main point and why we really are over here and why we invited you on the show today is being a buzzer on the back of the recent cabinet decision, right? Now, can we go back into it? What will be, I'm sure you studied it, what the final impact could also be. What is it really going to mean for the MCX business and the volumes?
Which decision are you talking about?
As far as derivatives goes and allowing the FPIs to participate.
Yeah, so as I said, see, the commodity markets have had a very recent history where institutional participants, normally any market would have institutional participants coming in earlier, but because of historical reasons, commodity markets are getting more products and more participants as we mature. So because of that, if FPIs, as and when FPIs come on the ground and trade on the market, as I earlier said, also we expect that there will be more increased liquidity and depth, because of which impact cost of trading would come down, and hopefully that would attract more participation across the board.
Can you give us a sense of if the FPI comes into the market? I'm just trying to understand very basic things here. What about counterparty risk? What about market making? Is that possible, or this is going to be a completely different discovery which will happen?
So market making is required in an illiquid contract. Right now, they've been allowed in cash settled contracts, which for us is crude, natural gas, and the index futures contracts, where we have sufficiently good volumes and liquidity and depth. So market making should not be a concern. As far as risk is concerned, SEBI has already laid down the norms for client level position limits, and that has been set at a client level limit for an FPI, and for individuals, corporates, and family offices at 20% of the client level limit. So I think the limits are pretty sufficient. Plus, SEBI already has a working group to suggest any further issues regarding this. So I think risk is not such a big concern. Of course, risk always needs to be managed, and market needs to be functioning in an orderly fashion. But I think SEBI has already addressed that through its circular.
What's happening to, in general, volumes? I'm just a very generic question. When we've seen a downtick in commodities, एक हिंदी में बोलते हैं तेजी का मुंह बाला बोल बाला मंदी का मुंह काला. Does your business get impacted if there is a downturn in commodities, because which is where we are right now?
So, see, our business gets impacted due to various factors, geopolitical situations, the commodity demand supply globally, domestically, regulatory decisions, government decisions, the domestic market sentiment. So there's so many moving parts that it's very difficult to say that, if prices move. So normally, wherever there is movement in the markets would trade, right? So, and as I said earlier, while you're looking at our futures volumes, which have fallen from around, say, 31,500, 600 levels to, say, 26,000 crore levels per day, but our option turnover has increased from around 1,000 crores to 15,000 crores a day. So overall, if you add up the numbers, I think, the growth is there.
On that note, thank you so much for joining us. But the big story that